Hey everybody, this is Trading Bitcoin. We have my partner Tyler on today, Tone from somewhere in the world. Yeah, this is gonna be fun, and it's long-term outlook. We are messing with Tone's mind here. Actually, he has the most beautiful chart ever. So prepare and don't just listen to YouTube today on your car because that would be dangerous. This one's beautiful. But let's get started and have some fun. Tone, first of all, where are you? And it's dark, so you don't sleep, like you're robotic.
Yeah, so I am in Kiev. I got here yesterday. I really want to spend more time here. I mean, Kiev's great. It's one of my favorite cities, and I'm only here till Friday. Actually, no, I'm only here till Thursday. So Thursday night, I fly out on an overnight flight to Thailand, where I will be meeting up with Van Zen and Willy Woo again. It's our twice annual meetup that we do somewhere in Thailand. Maybe we'll move it to Indonesia one of these days. But Van Zen doesn't really like fly much outside of Thailand, so might have to keep it in Thailand. Anyway, yeah. So I'm in Kiev. I got 2 more nights here, and it's already dark. It's already what time is it here? It's 5 p.m. But it gets dark really early, and it's really cold. Like it's colder than London, which
Wow.
is just a weird thing. I really gotta come here in the summertime. Okay. Anyway, that's it.
Wait, question. Do you do your workshops in Russian over there? Or you
I
switch
haven't.
between?
I will. I just like haven't done it yet. I'll probably gonna do one here if I come in the summertime. If I come in like June or July, I will do it here. I'm not sure if it's gonna be in Russian or in English. It'll probably be in Russian, but then I don't want to, like if people that are not Russian want to come here, like I don't want to, exclude them. So I'm not sure what I'm gonna do yet, and I don't really want to do the same thing twice on back-to-back days, one Russian, one English. So I have like 2 months to figure it out.
Nice. And Tyler, do you want to announce that we're starting to do our webinars in I can't do that one. The clacking language.
Я говорите по-русски. Пожалуйста.
Ooh. Yeah, we're gonna do it in Russian and just keep switching languages. All right. Well,
No,
Ty,
hi everybody. Thank you all for signing up for our Hyperwave webinar. We had like 30 people come in all at once, and we really appreciate it.
in a day, you guys are crazy.
It's going to be terrific. I've still got a lot of work to do on it, but the big thing is that we are going to be looking at great detail on 25 active hyperwaves around the world and going into how to trade them. So it's going to be a lot of fun, but thank you all very much.
Yahoo! And thanks for the feedback from our Unconfiscatable folks. All right, let's do some trading.
All right, let's go to screen share. Leah, thank you so much for hosting and keeping an eye on the trolls in the live chat.
Ken Bozak sent a nice tip already. Thanks, Ken.
Hey, thanks, Ken. Hey, are you going to come on the next cruise, Ken? I'm already in. It's in June.
Ken, if we pay you instead of a coin, can you tattoo all three of our faces on your body instead?
Oh, that's yeah. What do we have to do? No. We can get them to like, I'm going to have like 3 different logos, right? Like we have the Unconfiscatable logo. We have the conference that's coming up in Malta. The registrations are going to open this weekend. That's going to have a branding. And then my financial conference that's going to happen in Asia, probably in October. That one's going to be really good. That'll have its own branding. We can start getting like the tone vase, Unconfiscatable branding. Get them to tattoo Hyperwave too.
Oh, so
great idea. I want to put a Bitcoin logo right on my forehead.
Tyler wants that.
All right, guys. So here's the website. Here are my upcoming workshops. I really should start. Hey, someone has signed up for New Delhi. Excellent.
That was me. Tone, that was me.
Delhi. Perfect. I am going to do a workshop in New Delhi. And anyway, Bangkok's next. That one's going to be very small. And Vienna after that. Vienna's looking good. And then Hong Kong. And then there'll be a few more added. What was I going to say? Calendar. calendar is going to look very different. It's going to look a lot cooler. For now, you want to go over to the monthly view to see where I'm going to be. Right here, I will be speaking at Traders Fair. This is the event in Thailand. This is why I'm off to Bangkok this Thursday night. I'll get to Bangkok on Friday. I'll be speaking at this conference right there. And I'm in the workshop hall, 12:30. I will do like an introduction to the TD sequential. This is a trading conference, which is why you're probably not going to recognize many people here because I really don't. Because I don't. I mean, a lot of these people are from Asia as well. So, but there's not a Bitcoin event; it's a trading event. And I have to check out. Oh yeah, this is Austria, the European Blockchain Investment Congress, and then the month after, I'll just do one more, and then we'll move on. This will be, that's Mallorca. There'll be two more here. I'll be speaking in Hong Kong as well at Token 2049. I believe I was added to the schedule. And this is Mallorca, and that's why there'll be a Hong Kong workshop. And then there is other events as well. Anyway, and this is Talent Land in Mexico. All right, enough time waste. Let's talk about the charts. Tyler, this is the monthly chart. We had broken 3,600, but I believe we are now back under 3,600, and we are. This is the weekly chart. And oh, wow, I really should have clipped the mic on. The audio must have been bad. Hold on. There we go. So this was that bounce on this Litecoin news day. I mean, to me, that's not like useful or anything like that. So I am looking for lower prices. I'm still waiting on my bounce to 5,000. It just doesn't feel like this is it, which is why I felt this is a good time to start looking at longer term charts. This weekly chart, we talked about it the other day with Willie, and nothing has changed. This is the weekly chart. We are now pulling back. If we look at the daily chart, I did this. By the way, Tyler, I saw your video from the other day, and it was great. The one that you guys did, the last video.
Oh, thank you.
Yeah, that was a really, really good one. And everything that you said about, Wave 7 and the hyperwave stuff. And I don't know if you saw my last video, the one I did from the airport, the 18-minute one.
Yes, I did.
Right. And I talked about the volume. What'd you think of like a lot of my fans are pissed that I called them stupid for me not expecting them to understand volume. But you guys have to realize that I do have like 10,000 people watching me, and like 80 to 90% of them are never attended my workshops, never attended any workshops by professional traders. And volume is probably the most complicated aspect of trading. There's not you can learn sequential, you can learn hyperwave, you can learn everything. Volume is like a completely different dimension of understanding as a trader. And unless you've traded for 10 years, you're never going to get it. Tyler, your thoughts?
That's exactly right. Volume itself is the same as price. Price is not a technique. Price is a thing. And depending on what techniques you overlay on top of price, you can draw conclusions. Same thing with volume. Volume doesn't tell you anything until you overlay either on balance volume or price at volume. Or one of my partners years ago used long-term volume along with price to recognize changes in intermediate and long-term moves. And he was the best I've ever seen at it. He tried to teach me for 2 or 3 years on a daily basis, and I never got it. So what Tone is saying is exactly right. Don't assume anything by looking at bars going up and down. There's much, much more to it. And I thought your explanation from the airport was great by looking at those 3 different periods, one with a very low volume in the middle, one with a higher one, which is the bounce we just had, but it was very suspect because it came out of nowhere and there was no follow through. And then a real volume spike back at the end of 2018, where we had 4 days of volume up, but even that didn't end up going anywhere. It did break a couple of short-term downtrends, but other than that, volume is very complicated. I don't trust it because I don't trust volume, even as reported on regulated exchanges. Volume on non-regulated exchanges to me is just noise. There's just no way to separate out. Now, that's not true. Willy Woo has a way of doing it, and I don't understand it. I do not trust the numbers that he is left with using, but he seems to have done a great job at doing it. So I don't want to say it cannot be done in the crypto world, but I have difficulty after 40 years doing it in the regulated securities world. So take that for what it's worth.
All right, great. Thanks for that commentary. But yeah, so as you can see, back in late December, you had a very similar volume spike to what we had, 4 days ago now. Very similar, slightly higher. Well, actually, very slightly higher. I can actually move this up a little bit more. Very slightly higher, but then there was follow through. The following day, the volume was almost as big, and then the next 2 days, it was even bigger. And we had absolutely no follow through. We've already had, this is now the 4th day after the big spike, and it looks like, it's already fizzled out. And I'm not expecting much from the price of Bitcoin. Let's slide over to the 12-hour chart. The 12-hour chart is in a bearish posture with the TD sequential giving you a sell indication on the 11th of February. And if you missed that, it gave it to you again on the first half of the day on the 12th of February. And it's still in a bearish posture. Let's see if the moving average crossover and this blue line can hold up the price. And then there is still a chance for that ultimate dead cat bounce in this bear market. The 4-hour chart is on a 5 of 9, getting into a moving average, nothing really all that useful. And the hourly chart is just pretty much flip-flopping back and forth. We can see that Litecoin continues to pull back from its massive couple of days of hype over Mimblewimble on extension blocks. I don't know if that's good or bad. All I know is that it's risky. And hey, I'm glad that Litecoin is doing it, not Bitcoin. And if it works, great. The crash test dummy survived, and the car is good. And maybe it'll be implemented in Bitcoin one day, but I highly doubt it. Extension blocks were shut down on Bitcoin for legitimate reasons. I don't remember what those reasons were. I'm sure we will debate extension blocks in the future, but back when they were suggested as a scaling solution, they were rejected. Will they be rejected as an anonymity solution, extension blocks with Mimblewimble on Bitcoin? I don't know. Litecoin doing it, is it going to make Litecoin more viable as a currency? Not really, not to people that understand what Bitcoin is. Is it a decent test case to see if Bitcoin can do it one day? Sure. I don't mind that. I just don't see Litecoin as investment grade, and it will deteriorate over time. In the meantime, Litecoin on a weekly scale ran into double resistance of prior support that broke down and the moving average. Bitcoin is not even close to going up that high. For Bitcoin to go up to that equivalent, right? Remember, Litecoin went from $23 all the way to 48. So Litecoin had more than doubled in price. If we look at Bitcoin, Bitcoin low was at 31.50, and Litecoin more than doubled. So Bitcoin would have to go all the way to $6,300 to match the percentage move that Litecoin did. Realistically, Litecoin went to the bottom of the breakdown level, which for Bitcoin was only 6,100, and the moving average, and it's the same moving average, the 30-week moving average. Let me make sure of that. That is the 30-week moving average, yes. So Bitcoin would need to get back to that combination of the floor that people said was unbreakable, that clearly was, and the 30-week moving average. So now you can already see that Bitcoin's 30-week moving average is already at 5,300, while the floor was at 6,150. So Bitcoin can't even reach the same double resistance as Litecoin did. It will probably only reach the moving average resistance. I think Bitcoin going back up to the floor is unlikely because there's too much overhead resistance. Now, once again, because an altcoin has rallied more than Bitcoin, it means that the bear market is not even close to being over. We continue to be in the bear market. Bitcoin needs to separate from the altcoins in the bear market, which we're going to talk about in a few minutes. Tyler, anything you have to add on Litecoin? Yeah, you can see this current candle. Once this candle goes to red, I am anticipating a price flip, though this could get to 9 on the daily. Anything you want to add on Litecoin real quick before we glance at traditional markets for 2 minutes and then talk about Bitcoin long term?
No, I agree with everything you said. It is not unusual for altcoins to do that. Ethereum doubled from its bottom just almost during the same time period that Litecoin was doubling. Litecoin has gotten stronger more recently. Ethereum was stronger earlier in January, but it doubled off of its bottom, where Bitcoin basically went from 3,100 up to 4,200, or about a third. So these other things are moving 3 times faster, and they will move 3 times faster to the downside also.
Yeah, here is the long short leveraged on Bitfinex. You can see a big spike in Bitcoin longs. That is going to be unfortunate for these people because I think they're going to get smashed again. The ratio is going up. If we zoom this out, we can see that the ratio has been above this, neutral line of 1, above a 1-to-1 ratio. Now, it has spent the majority of the year, the second half of the year, I should say. It spent the second half of 2018 below that ratio. It's now back above. So that probably means there's more downside to come, even though spending half a year below sure didn't help the price of Bitcoin. So many people were short and the market outlasted them, right? Like so many people were short and a lot of them gave up on the short. I didn't give up on the short, but most people did. And then, the ratio spikes in favor of bulls and here comes the crash, right? So this time around, we'll see what happens. Markets find a way to separate the majority of people from the majority of their money.
Yeah, absolutely. And my sense is, because the shorts are not going up and we are very close to breaking the lows at 3180 or 3170, and someone tried to pump it 5 days ago with no follow through. I just get the sense that we're on the verge of breaking right through that long-term 200-day moving average, which if we do that, I think it's going to be very difficult to recover from.
Yeah, I agree. Even as we speak right now, we're looking at a new weekly low. So if I go to the daily chart, we just got a price flip on the daily and the 12-hour. No, it's not a new swing low on the 12-hour, but it's still pretty low. Okay, gold continues to pull back in its second week of pullback from a 9. We're watching this carefully. I think it has one more week of a pullback to go, and then we got to start to reevaluate the 9. This was certainly a 9 as a short-term swing trader. This was definitely a tradable pullback. If you were, gold futures trader, definitely a tradable pullback to the downside. And now you got to reevaluate, is this 9 the start of an uptrend or the end of one? And I think it's a little too early to tell. So let's see what happens over the next couple of weeks. We're going to be watching gold. It's very interesting.
Yeah, I agree. It's very interesting to me. The thing that stands out on this chart to me is the brown trend line. The break of that could very easily be a signal of a bull trap. And so I've been nervous about the possibility of a bull trap above that trend line. But we have now gone into the third week after that break, and we are on a 9. And up till this point, the 9 hasn't been significantly observed. That doesn't mean it won't be later this week or going into next week. But if I am right, and I'm not saying that I am here because I don't have a lot of confidence, we've taken small positions in gold, both in gold and gold mining shares, on the basis of Consensio being fully bullish, and we broke that downtrend line. Those two things are the elements that got me to go ahead and put clients' money to work in gold. But I am nervous about if this is more than a 1 to 4 week pullback after a 9, and I'm ready to stand aside if we can't build some momentum. Having said that, I am very pleased at the daily action. We were actually up on a daily basis earlier this morning, and I'm not sure if that's going to be able to hold. But if we can hold above that short-term trend line, which is the goldish color below it, after a 1 to 4 week pullback, and let's just say maybe it's only a 2 week pullback or a 3 week pullback, if we can hold above that short-term trend line that is now accelerating up, then it won't take long for the intermediate brown purple line to cut up through the blue long-term, and then we will be fully bullish in terms of Consensio. We will be above that very long-term downtrend line. We will have a 9 behind us, and then I believe there's a real possibility of testing 1380 to 1400. And if we do that, we're off to the races. That's a lot of ifs. I just gave like 5 ifs, and I'm not ready to say we're going to get 5 ifs, but it's lining up as a possibility.
Hey, Tyler, so let me ask you another question. Like, I know you guys have your hyperwave group, and you have 30, 40, God knows how many hyperwaves that are currently in the making.
Right.
And you and I have discussed gold at length, but I don't remember, was gold in a hyperwave from 1998 up until 2011?
Yeah, I believe it was. And the big question to me is, was it a complete hyperwave up at 1900? Certainly the move from 265, or let's call it 270, up to 1900 has all of the elements of a fully completed hyperwave. It's a little bit messy, but it's not horrible. I like the way you've got those lines drawn. Basically speaking, that's the way I would draw those lines. So you've got a 1, 2, 3, and then the big 4 up, a perfect down 5, an up 6, and then a down 7. Well, the down 7 broke below the phase 3 line. So no funky hyperwave at phase 3. The possibility of a funky hyperwave at phase 2, but notice how sharply the phase 2 is coming up. In other words, it's up to almost 1,000.
No, and that's what bothers me, Tyler, with this.
Yeah, it's up to 1,050 and moving up higher and higher. So the longer the price can stay sideways between about 1100 and 1300, the greater the possibility that this phase 2 line is going to catch up with it, and then we could boom to the upside. Or we could move up from these levels at least and reestablish some kind of an uptrend. But that's a great observation. We've got a big group of people looking at this as well as silver. And to me, it's not so much the individual patterns, it's what do they mean? And the fact that we had what we did in Bitcoin, and we're now looking at one on the gold side of the things, is one of the reasons Lee and I wrote that Medium article about something big this way comes, and it could be very wicked because we're seeing more and more hyperwaves in various things, currencies, as well as gold, as well as Bitcoin. The Bitcoin one didn't work out. I think the next one will, but I keep open the possibility that gold is in the mix here somewhere. So we'll just take it a day at a time.
Yeah, I'm with you. I mean, I really don't want to spend much more time on it. We have to do a show on gold hyperwave because there's like so much here. So first of all, the phase 1 line is a complete and utter disaster. Like I have no idea where to draw it. You can draw it at 250. You can draw it at 500. You can even draw it at 800. And we kind of have nothing. The action in gold since 2015 has been a complete cluster, like you know what. We continue to get slightly higher highs. We are flattening at the top. This feels like it needs to correct below 1,000, but now you have that potential phase 2 line coming in at a double bottom. Like the gold chart is a complete and utter mess. Like I'm waiting for it. I mean, if we can get above 1,400 and close there on a weekly basis, I will know exactly what's up with gold. But until that happens, I'm just like, wow, this is like a giant mess. Stay away from it.
I agree. I agree. And as I said, there was only 2 elements that got me interested in it a week or 10 days ago. One of them was that trend line. I love long-term trend lines. This one only had 3 points, 4 points on it. But that's significant because it started back in 2011 and we just broke it to the upside. And that to me is a very important signal in any technical analysis. On shorter term trend lines, I don't care that much. But now, not only did we break above it, we got a full candle above it, and now we've got 2 more after that. That tells me that something is going on. And the fact that we're now holding even with a 9 above this short-term moving average, if that gold short-term moving average with the 3 dots, which is predicting where it'll go if price stays about here, if we can go through this week and into next week and then start up from there, I think we're going to test those the 1380 to 1400 area. And then I agree completely with Tone. I'm all in if we get weekly closes above $1,400.
Yeah. So at this point, like if I wasn't like, you know, traveling and if this was me like 2 or 3 years ago, I would be really reading what Martin Armstrong has to say about gold. He's pretty good in a longer term cycle world. And gold is his specialty for the last 40, 50 years. So I would kind of pay attention to him on this one. But other than that, it's I'm watching the sequential and it's been treating me well. I mean, if you can see by what happened here leading up to this point. All right. Yeah. Quick word on, wow, this is beautiful. It's exactly what we expected, didn't it, Tyler? Isn't it, Tyler?
Yeah, beautiful.
This is just gorgeous. This is the daily chart using the futures market. Beautiful day today. Absolutely awesome. You are on an 11 of 13 sequential coming in from this 9. Look for 2 more days. Then you're going to get your 9 sell on the sequential. Today is the aggressive, but the market is ignoring it. Wall Street will pay attention to the TD9, to the sequential 13 coming in a couple of days. And Wall Street did not get a 9 here, so that was not one to worry about. It was at the time when the candle started, but the count was broken. The trend line is intact. I don't even have to draw it. And this looks absolutely great. If we can close the week at a brand new swing high, that's it. I think we're out of the woods, and a bull market, here we come. Here's the weekly chart. This is that cluster. I mean, let me not count my chickens before they hatch. Today is only Tuesday. You have 3 more days. But if this thing can push and close above 27.45, man, Tyler, you're probably going to be a good 80% invested back in the stock market, aren't you?
We'll be 100% minus the gold. Right now, we're down around 40, 50%. We've been holding that since late December. Took off our inverse funds in the 3rd week of December and have kept that money in cash, except for the 10% we put into gold, 5 in the GLD, 5 in the GDX. The rest of it is sitting in the market, but I haven't given signals to our consulting clients yet to go all in on this, but I am literally that close to doing it. I need to get above 2,800, and I need it to stay there for a week and get a weekly close above it. And it's trying under tremendous political pressure, under tremendous resistance, under all kinds of economic cross currents with China and all of the problems with the wall and all that kind of stuff. And this thing just keeps pushing higher. That's very impressive action. But as Tone says, don't count your chickens before they hatch. And they have not yet hatched yet, but it looks like there's cracks in the egg.
Yeah, I mean, this is going to look really good. If we can close this week above both of the moving averages, you'll complete a 5 sequential with potential 4 more weeks of upside. And tomorrow you get a green 2 above a green 1 above prior highs. I mean, it's setting up for a really nice push into 2,800. And that's like a quadruple top here. So that's probably going to break to the upside. And I really wonder what all those gloom and doomers that were saying that the market is about to fall 80% are going to say, because they're just going to say, oh, it's manipulation and all this other nonsense.
Yeah, I agree.
Hey, want to have a fun one?
Yeah, you got a question for us? Let's do it before we get to the long-term view.
I was grumpy this morning on the live chat. I do have questions for you, but I have a personal question for some well, I can't even speak. Throw up iron.
Iron?
Iron?
Mm-hmm.
Like iron a shirt?
Yeah, for sure, Ty.
I'm long irons.
I'm short of them.
I'm short ironing boards, but I'm long irons.
I don't have an iron. So I'm big time short. And while Tone brings it up, I'm putting you on the spot, Ty, but what's your thoughts on the importance of iron going, you'll see soon, but just of iron in general? I mean, it affects steel, but what's your thoughts on iron?
Well, to me, it's very similar to copper, aluminum, zinc, tin. All of those things go into other things, and all of those things go into big machinery and are essential for it. So, wow. What is
fun, right? Go for it, guys.
Yeah.
Wow. Well, the daily certainly topped.
Yeah.
Which I saw it yesterday after a 9-13 combo followed by sequential aggressive on the same day. Wow. Why are sequential and aggressive always on the same day?
You guys look so excited.
I know why. I thought it was a bug in my code, but no, this proves that my code works correctly. Oh, that's awesome. So the aggressive and the sequential will always be on the same day. Who wants to answer why that is?
Well, I know what's going on with iron, but Tyler, what do you see in the charts?
Well,
I like when you guys
I
smile.
can't tell on the daily, but maybe throw up a weekly or a monthly.
Yeah, no, but I gave a quiz. I gave a quiz to our audience, and let's see if anyone answers it in the live chat.
Yeah,
Why
somebody that took your class should be able to answer that. Look at that. That's a very
Don't worry, I've never taken your class. I'm not going to answer.
that's a significant part, a significant breakout of a very important commodity. And I don't have any explanation for it. We broke that old high. So we are going to very long-term highs. Maybe just pull up a quick monthly. Look at all those nines. Unbelievable.
Jesus Christ. Like, can anyone find me a better looking
chart? That's amazing.
Did I just win today? I'm so happy.
Yeah, that's a great
I'm not grumpy anymore. You guys are
Look
smiling.
at that. Look at this. Look at this.
Wow.
That's amazing.
Throw up the monthly for a second.
Almost at the top.
That is remarkable. And there's not a lot of volume in this thing, so somebody is playing the sequential and making a bloody fortune. Okay, here we go. So this is that is a big breakout on this last monthly candle above the previous highs. We've got higher lows coming all the way back 2 years. And after a big downturn, isn't that weird? First of all, why the big downturn from 2011 to 2016? If you can answer that, you might be able to get an answer of why we've been moving up into a bull market since 2016. And I don't have the answer.
Well, that's, I mean, that's no different. It's no different than gold. It's just a general commodity pump. After the 2008 financial crisis, I mean, people, rushed into commodities. Leah, yes.
China. That's when China was having really big economic issues. Now you're laughing at me, but yeah. China's like leads all crazy iron stuff. Yeah, you're laughing at me. Okay, keep going.
No, I'm not. I'm a good student.
Apples.
No, go ahead. No, you're the fundamental analyst, and we're the technical analysts, right? Like,
what?
So
much fun.
So for me, after the 08 financial crisis, people just rushed into commodities. I mean, Tyler, I'm sure you remember, what's his name? Not Hank Paulson, but the other Paulson from Paulson Funds, the one that made a killing in the housing market, and thought he was too smart for his own good, declared that he's going all into gold in like 2010, 2011, near the top of the bubble, and then you never heard from him again.
Yeah.
And everybody rushed into commodities after they thought that the world was going to end. Oil pumps to $150 a barrel, then crashes to 35. Gold and silver pump, along with most of the other commodities. And iron looks like it's one of them. I don't have the data prior to 2011, but it seems to top around the same time as gold and silver. And this is around the same bottom as gold and silver. So it's pretty correlated to the precious metals. However, this commodity did break out as opposed to gold and silver. But on the flip side, look where the top was. The top was at 180. The bottom was at 40. So this thing, unlike gold, I mean, gold only fell like 40, 45%. This thing fell, what, 75% or something?
Yeah.
And Tone, while Tyler answers, pull up steel, and we'll round out this fun conversation today.
Yeah, 1 second. So this thing fell like 75%. So it's kind of like a shitcoin to Bitcoin, which makes sense. It's iron
but
versus
now it's more than doubled to its new high. So it's like gold going from 1,100 to 2,200.
Now, granted, I think there's clearly more room to go here. The monthly chart has broken out of its prior swing high. This is probably pretty bullish. The weekly chart is on an 8 of 9. So, and it's a double top. So the weekly chart might actually be coming to an end, or it may make it as far as 100. The weekly chart, like the time to buy the weekly chart was over here, was when we were breaking above these highs.
Right.
That was the time to buy this thing when you broke this risk line. Man, the 9s are just beautiful. Like, I would not want to mess with this chart with the 9s on a weekly. Look at this. It's like every freaking swing high has a 9 on top of it. This is ridiculous.
Yeah, amazing.
So I wouldn't mess with it. And on a daily chart, we're clearly on a pullback. And to answer my trivia question, how come on a daily chart your aggressive and sequential will always be on the same candle? And now the combo doesn't have to be, is because aggressive is a looser condition of the sequential, which compares the high to a prior high instead of a close to a prior high. But as you can see, this commodity doesn't actually trade intraday. It just has like a once a day price, except on these weird kind of days. So there is no swing high. The close is always the same as the high. And that's why your aggressive and sequential are pretty much on the same day, because it's the same. The math comes out to be the same.
Interesting.
All right, so we're gonna save iron, and okay, we have to do this really quick because I do want to get to Bitcoin, and I do want to go to dinner. I haven't eaten yet, so let me make a copy. But this is the weekly chart of iron is a great way to review.
Yeah, it sure is.
Sequential. Beautiful, absolutely beautiful. I need to tweet that out. Maybe I can generate some sales. Make a copy. I didn't say that.
You do it with steel. All right, then you had your chart. You haven't really showed it yet. Otherwise, I have some other questions from live chat. / I'll be selfish.
No, I'm gonna look at steel real quick.
Are you gonna have chicken Kiev tonight?
Yeah.
No, I will. I don't know what I'm gonna have actually. I'm going to a Georgian restaurant, so that should be a lot of like shish kebab and probably lamb. So that's great.
Lamb Kiev.
So steel. So I don't know what.
Maybe HV, Midwest Domestic Hot Rolled Coil Steel Index Futures.
I mean, I'm not sure what the future is. No, HV is HIBOR.
No, HV is in Victor.
Oh. But is that hot rolled oil steel index futures? Okay. Is that good enough?
Look at the nine.
Right. Yeah,
look at the nines.
That's the future. Yep. I haven't pulled it up yet. Oh, I didn't see that coming.
I know some Georgian. Gamajoba, Malaoba.
So steel is on a big downtrend here. It did not pump in recent months, and it's been in a downtrend since the summer. Now it did pump early in the year. Again, beautiful 9 highs. Well, steel is easy to analyze right now. It's pulling back to prior breakout level, right? So there it is. So once steel gets into this vicinity, it's probably a buying opportunity, which means almost now, right? So you are on a combo, aggressive, sequential. Wow. 7 of 9 weekly. I would be looking to speculate on steel here. You got a giant cluster coming up. You can almost start to nibble in on the longs in steel now, looking for a 9 in the next couple of weeks. I'm going to zoom out here some more with a monthly chart. And it's actually looking really good because you can also claim that this blue line should really be up here. And now you're almost there and you're on a 6 of 9 monthly. Look where a monthly top, Tyler.
Yeah, amazing.
And yeah, so I would be looking to go bullish steel right here. That's a data error. Don't ignore that. So I don't expect steel to go back to its lows. I think a 50% correction, it's like a 35% correction. I think that's good. I'm liking steel here going into next year and like picking up. I mean, as a trade, I like it to have a bottom over the next few months.
I don't like the fact that we broke the 2016 trend line just about 2 months ago, which says that if we have 2 more months to go or 3 months to the downside, we could do damage to that trend line and the setup trend line, and we could go a lot lower.
Oh yeah, it has to hold the setup trend line. It has to hold this green dotted line.
Right.
That is an absolute must. Ideally, I wanted to hold these swing highs. And even if this trend line is irrevocable long-term damage, you can still have a swing back into that trend line in the $850 range before a bigger turn down. You never even have a secondary top.
Right.
Can I add an FA thing?
Sure.
Yeah.
Woo! Because I completely agree with you. So what's interesting, at least for me, and why I made you do this little exercise, and we'll totally go to Bitcoin, is that they're totally correlated. So with first of all, with iron's like dramatic rally, you know, it actually like previous, it raises costs for the steel makers, and that can actually potentially cripple profit margins unless they can pass on these additional burdens to the customers. Now, that is a critical issue in China, which is the world's largest steel maker and accounts for actually half of the global output. But there's a lot of potential that I would bet on that they're still going to be able to and actually make more money, because they're not going to be, they're not going to be like hurting for sure. And specifically, it's going to add pressure, right, on these steel makers and probably prompt, you know, maybe like a shift back towards lower quality ores. But I think that actually will be pretty solid for the long run, and also something to probably consider for everybody in this chart, a proxy trade with Australian miners. But I will stop there. Okay, Bitcoin.
All right, let's go talk about Bitcoin. I'll save these charts for later. Remind us to look at it, please, Leah, in the near future.
Yay. Apples for the futures today.
All right, so I've been adding a couple of things to because before I publish this, I want to cover pretty much everything, right? So I've been slowly putting this thing together in my off time and preferably on camera, right? So I adjusted a couple of things. I delayed how long it will be before an ultimate breakout above prior swing highs. And because I put in this little drop here. Now, I also added this arrow here because I need Bitcoin to decouple from the altcoins before, before new highs can be made, right? So I think it's as long as I can delay the decoupling between Bitcoin and altcoins is late next year, late 2020. Now, the interesting thing is what I have here. So again, because the current pop in Bitcoin came off of the back of Litecoin and it got people giddied up for no reason, I'm expecting this bear trap. I am looking for this bear trap to show up sometime sometime before the summer, maybe even this month, maybe next month. I'm expecting a bear trap at under 3,000, because once we go under 3,000, people are going to panic. Tyler, it's what you said in your last video, like what happened when we broke below 6,000, everybody panicked and we fell 50%. Again, as you know, traders and public figures like ourselves, we got to try to think differently than the mass crowd. And this is the best way I can think differently as the mass crowd. While the last time I was all about once we drop below 6,000, we're gonna crash hard for like 50%, which I was exactly right. I even like was over right because I thought we can bounce from 4,000 back to 5 or 6, and I was clearly wrong on that. And we reached my target that I had at 3,000 pretty much within $100. This time around, I don't think that's going to happen. I think this time around, that's too easy. I think that, again, the majority of the traders will be wrong. And I think this time around, when we fall below the 200-week moving average and it starts to crash below 3,000, everyone is going to be bearish and everyone is going to assume that 2,000 is a given. And that's when I think they're all going to get wrecked with a bear trap at 2,900 as it rallies all the way to 5,000, once again, putting everyone in the wrong trade of being bullish while the bear market is still halfway in.
Yeah, I love this chart. I think it's got a very strong possibility 2 years from now to look very similar to the way you've drawn it. I at this point disagree with the bear trap, although I think we do see 2,900 fairly soon. I have become convinced, but I don't have a lot of evidence for it, that the majority of people that are watching Bitcoin believe that somewhere around 2,500 is the ultimate bottom. And very few think that it's going lower than that. So to me, the greatest surprise would be breaking through the lows at 3,170, 3,180, and keep on going right below the 2,500, 2,400, 2,200 levels that so many people think. So I think there's less of a probability of a bear trap than some sort of a bull trap before that occurs. And that would be, I don't think it can get to 5,000. Right now, stop and reverse points and moving averages and things are coming down so fast. I think 4,800 would be max. I've been saying I don't think it can get above 4,200. So far, so good on that, but I could easily see it happening because I think Tone's been right all along that that's where the probability is. After the 50% break, there's been no upside reversal at all. Just a tiny move from 3,100 to 4,200. And that's not enough to really establish anything. So I can see a bull trap coming. I have serious doubts about a bear trap because I think if we take out that 31, there's open air down to what most people believe is going to be the ultimate bottom, and I don't, which is around 2,500.
Right, and I have that over here. Like this is my $2,200 area.
Right.
In August as the, now you're right. This could happen first, or even the bull trap can happen first. I am one of the few people that is going out on a limb saying that 2,900 is imminent, and then we spike up. I don't think anyone else is saying that.
No, I agree. I agree with you. And that's a very logical thing. We've seen it on many, many charts before. So it could very easily happen. I'm just leaning to the other side. I have been so unimpressed with the ability of Bitcoin to respond to a 50% drop. When you take a look at the giant drops off the peak, each one of those was followed by an immediate reversal back up, and sometimes significantly back up, from 6,000 to 10,000, 6,000 to 8,500. all that kind of stuff. This time around, there's been no resilience in the price. And because of that, if we again take out support, this support is only gone on for half as long as the 6,000 level hung on for. So you'd expect when the 6,000 broke, it would be bad. And it was 50%. But now we've gone on for months after the break and with no resilience at all. And therefore, I think if we get a break, it could be very significant.
Yeah, and by the way, what people don't really realize, if you look at my chart, and people are very upset that I'm not calling for new all-time highs until like mid-2023. But if you look at this, it's actually more volatile than what we've seen so far.
Yeah.
I mean, if the volatility stays as it was, this could last even longer.
Well, what I'm hoping your timing is right. I don't have a good sense of the timing because that's the way phase sevens work. But on a fundamental basis, Bitcoin needs a long period of time in order for, first of all, the decoupling that you talk about with your purple dotted line, that's got to occur. The faster that occurs, the shorter this time frame is going to be. The longer it takes to occur, the longer the time period is going to be. The longer the time period, in my eyes, the better it is for Bitcoin, real long term. When we talk about being able to compete with gold and other things years from now. None of this is going to happen in the next weeks, months, or a year or two, unless things start falling apart, and then Bitcoin's not going to be a part of it. It'll be gold or something else. But so the longer this goes on, now, if you couple two things together, one is Tone and my feeling that we could be on the verge of a breakout in the stock market. That would indicate continued economic strength in the US. That would indicate continued neutrality with the rest of the world in terms of running into a big problem. If that doesn't occur and the stock market turns down from here and the economy turns down, then all of these time frames are going to be shortened. But right now it's setting itself up that if Tone is right on this timing, and Tone and I might be right on the stock market being strong in 2019, then that's giving Bitcoin a chance to get rid of all of these barnacles that Tone's got with this purple line, and to get everybody to understand the difference between Bitcoin and everything else. And that sets it up to take off to the upside. So I really hope that this chart is accurate.
Yeah, and there's also lots of little intricacies that people may not pick up on, is that I treat every halving as having a completely different environment. As you can see, the original halving, basically the price went pretty much flat into the halving and then increased then after. In the last halving, the price pumped into the halving and then fell then after. I'm going through all four of the different types of transitions. This time around, I'm expecting the price to keep going up into the halving and after the halving for the third different variation of it. And then the next halving, I am once again anticipating a longer move into the halving and then a complete crash then after. So we will see how that one goes. The other thing I wanted to kind of cover in this one is, I'm using BLX, right? So I wanted to do some time analysis. Let me see if I can pull that off here. So there's actually a couple of things in time. I don't want to, we got to this a little bit later because I wanted to play around with it a little bit. So I wanted to Wait a minute. I wanted to do this, right? So if we go from the peak, I don't really need the corrections. I really need just the time, how many bars. I'm not sure why this is negative. If you go to the left, it's no. Anyway, I got to play around with time. I don't want to do this on live air. So next time I get a free minute to look at this chart, I'm gonna put in some time analysis. However, those of you that remember my articles from Cointelegraph, if you just go and Google intro to, why am I in caps, to time part 2. Oh, tone vase. There it is, right? So this was my article explaining cycles and time analysis, where I called certain days to be absolutely critical in the life cycle of Bitcoin. This was August 11th, and this, I believe, was, let me see, I have the list of dates actually, because someone put this into a script for me. So this one was June 18th of 2015. And this one was August 11th. So this one actually covers, and I predicted these dates, and it's all in the article here. The article was published back in August 14th. This corresponded fairly well, almost to the, I mean, definitely to the week, almost to the day of the Greek banking shutdown, helping us reverse the bear market to a bull market. This corresponded almost to the day of the user activated soft fork activation. And so these were very critical dates. So I have the next date, and I spent like an hour looking for this email where someone did a script of all of the critical dates based on the same math and model, the basics of pi. So this is a circular model broken up into quarter cycles based on pi. Someone wrote a script for me, and I was looking for that email. So thank you. I'll drop the name. Thank you, Mark. You know who you are if you're still watching. I don't want to give your last name. Let's not get you trolled. But Mark, thank you for that email. I finally found it again. And the next date in the quarter cycle, and the quarter cycle is no longer important because we already went through one full cycle. Now that we've gone through one full cycle, the quarter cycles are less important. The half cycles are still important. Eventually, the half cycles will not be all that important as the time becomes bigger and bigger. But the next quarter cycle comes in, and I just found this date today. So Leon, I copied it. It's October 5th of 2019. So at least I'm going to go to my chart and mark where is October 5th, 2019, because that's the next cycle date. And I might have to adjust into that date. So, right, so October 5th is coming in around here. So that's October 5th. So I'm gonna cycle into October 5th because it is a critical date. And this is how I kind of do my analysis, guys. So I'm gonna go here into September 30th because October 5th is in the middle of that week. So I didn't have to move it by much, actually. I almost timed it to within a week by almost accident, right? So I am looking for this date to be the next quarter cycle date. This is, and I also want to look at the date after that, is November 29th, 2021. And I'll list these dates. Maybe I should list them already, actually. So this is quarter pi cycle. And so this would be October 5, 2019. So that's a critical date I'm going to be paying attention to. I don't know what color I should make it, but I guess we'll just stick to blue. So that's a critical date. And then the half cycle, and the half cycle is going to come in on November 29, 2021. So that's not here. So I don't have any cycle dates where I'm expecting a bottom. So I may need to readjust some things, right? I mean, maybe this will be where the bottom comes in. I'm not sure. I'm going to have to think about this a little bit more. This is why, you know, I don't like randomly draw long-term charts with random lines. I do think about some stuff. But my next cycle date based on, you know, the Martin Armstrong 101 is 11/29/21. So that is, oh wow, so that's November 29th. So that's around here. No, further. Here. Right, so once again, that puts me in the middle of nowhere. And I expect these dates to be critical. So I may have to reevaluate what might happen. November 29. There. Okay, so that becomes the quarter cycle. And these dates are critical because they've been critical in the past. So this is November 29, 2021. So like I said, the last two were the quarter cycle, and the half cycle, by the way, in the original count, puts you right at the Cyprus banking confiscation. Like these dates have been always critical. Like each quarter cycle date has been very critical to Bitcoin's life, like major events. So I do want to account for them, and I'm not sure what I'm going to do with this one. It kind of puts me in the middle of nowhere, and maybe the whole thing will bottom out sooner, but also the fact that each bear market takes longer and longer is something else to consider. Or maybe this will be the ultimate bottom, right? Maybe this shit is going to be maybe this thing will last 3 times longer than any of us expect. Like, I don't know. Nobody knows, right? All I can tell you is that I'm not going to mess with these dates. I believe they are critical, and I will keep them in mind. We can put one more up there, or maybe we can put the whole cycle up. The one after comes in January 23rd, 2024. So if I take this guy, maybe the halving is going to be delayed, actually, if the price is going to, get suppressed. So I don't know what that would mean. So we're looking January 23rd, 2024. So January 29th, January 15th, January 22nd. There it is. Okay. So, that's what I'm not sure where to stick this thing, actually. So that's what we're looking at for the third quarter cycle. So this is the quarter cycle, right? So the other one's the half cycle. So this is January. So I know I'm boring a lot of people, but hey, you guys get to watch how I put these charts together. January 23rd, 2024. And the cycles start with the Genesis block. And then there's one more, 2+ years later. And the final date, I'm not going to plot it, but it's going to be March 18th, 2026. So that's going way out there, right? So I don't know. I somehow have to factor these things in. This is the half cycle. And then I can also put the old ones in there and stuff, so that you can see what happened and what incident took place in Bitcoin. I don't really, I mean, I don't know, Tyler, if you want to throw your opinion in, but this is just something that I do with the Martin Armstrong pi cycles. There's also phi cycles, and there's other stuff you can do with cycles. I mean, time analysis is as comprehensive as price analysis and as comprehensive as volume analysis. And if you have the time to do all three, I mean, that's amazing.
Yeah, if you have time to do all three, you don't have a life. But
that's true.
Some of us, that's true. Cycles to me are unbelievably important. I spent maybe 8 or 10 years. That's all I was studying. Cycle Sciences is a great publication. It's been going on for a long, long time. It was edited by Peter Borish, who was Paul Tudor Jones's head of research for a number of years, a great technical analyst. There's all kinds of great work done having to do with Kondratiev cycles and kitchen cycles and wall cycles that are all different lengths and different times. And what they do is you get translation, it's called, to the left or the right of expected dates. And it gets very complex. However, anybody that has spent time studying them knows absolutely that they are a very important part of what goes on. And nobody's got a great explanation for it other than when you start getting into astrological things, not so much constellations, but simply the movements of various large bodies that create a lot of different things, including biocycles that we all live with in terms of waking up and going to sleep and eating cycles and on and on and on and on. And for those type of cycles, the length of time it takes for the Earth to get around the sun and what's actually happening from a physics point of view, as well as a biology point of view, as that occurs, with cycles having to do with harvest, cycles having to do with growth, all of that kind of stuff. It would be silly to assume that cycles don't show up in human behavior when looking at technical analysis. They do. But that's a whole different world. So I love this chart. It'll be great to see how you resolve some of these quarter cycles. Also, I refer everybody back to beautiful pictures by Robert Prechter that is simply, all it is charts of PSI cycles having to do with Fibonacci and with Elliott wave, going all the way back over a century into the super cycle that we peaked in in the year 2000, basically, and what it has been doing since then. It's very difficult not to flip just page after page after page, going longer and longer time, and see how all these cycles line up almost perfectly with the actual movement of price in the Dow Jones Industrial Average and the S&P 500 for 100 years. So don't dismiss what Tone is doing here. I wasn't really aware until today of what Tone was doing with Armstrong's work. I know that Tone really followed Armstrong for a very long time, and I assumed that some of the cycle work he was doing was based on that. But it's great to actually see Tone going through the analysis itself to figure out how he is making his predictions in terms of time, and why he's so attracted to things like sequential, which is basically a time-based system. So all very interesting.
Thanks for that, Tyler. Hey, Leah, are you bored? You alive? How you doing over there?
Back. Yes.
Hey,
No,
so
not bored. Alive. Yes.
okay, so let's see if you have questions, but I see a question that I kind of want to answer because it's an interestingly phrased question. It says, Tone, is it possible Bitcoin will never recover due to manipulation? So I'm going to give a very short answer, and it's a two-part answer. Is it possible Bitcoin will never recover? Yes. Would it be due to manipulation? Absolutely not. Tyler?
I agree completely.
All right, Leah? What else we got?
Nice answer. Love it. Actually, you got a lot of manipulation questions. I was trolling the box. Do you want to continue with manipulation, or you want some other
Whatever you
questions?
like. Well, whatever you want us to answer, but let's in 10 minutes we should probably get going.
I think that's a good idea. I need a little more coffee. Let's see. Well, I'll do your tip question. You did get a tip. So, thanks for the video, guys. I'll read it directly. I don't know if in 2014 we had, 4,000 alts to die during the 2015 bear. Any chance Bitcoin will run again to all-time highs with alts not being dead?
That's a good question. It's possible, but then you're looking at like a bigger hyperwave, and that it's going to be scary. Like it's possible. I mean, like, was it possible for the NASDAQ bubble to go back to a higher all-time high? Like if I pull up NASDAQ, I really don't, I don't want to stay on this chart, but if I pull up NASDAQ, load chart layout, NASDAQ composite, the last time it's a weekly one. I think that's my presentation chart. So if I look at the long-term NASDAQ, yeah, it's the hyperwave NASDAQ. So, I mean, as you can see, this was the NASDAQ bubble, and this was the financial crisis. So the NASDAQ was at 50% of its former high 7 years later at the housing bubble. What you're saying is that the Bitcoin goes back up, but all of the useless .coms that had no money and no profits and never belonged to be publicly traded in the first place, what you're saying is they're going to pump alongside, in which case the NASDAQ would have reached a new high at the 07 bubble and would have had an even bigger fall during the 07 financial crisis when the money dried up, right? Like if you think the useless .coms died here, imagine what would have happened to these .coms if the financial sector would have got decimated along with the tech sector, right? And then look what the NASDAQ did then after. I can probably delete whatever that was. Look what the NASDAQ did and whatever that is. Oh, wow. I don't know what the hell is over there. I don't know what that is. Anyway, I guess I used like other timeframes here. So, but this time around, look, we went to all new highs, but the tech sector is solid. We don't have, as far as I know, we don't have empty .coms people are speculating on. So do I think it's possible for us to go to a new high with the shit coins? Anything's possible, but this is highly unlikely. Tyler?
Yeah, I agree completely. The answer to the first part of the question is no, there weren't 4,000 projects back in 2014. There might have been 400. I don't know the number, but I think we're 10x that this time around. So we're carrying a lot of weight. And for us to go back to new highs, I agree with Tone. The only way that could occur, I think, is if it's setting itself up for even a worse, longer crash afterwards. Nobody should be hoping for that. Nobody should be hoping for it until we can clear out all of this rubble, all of this underbrush, and just have all the boulders off the runway. You got to clear them all off so the plane can take off. And right now, that's not the case. And therefore, I think it's highly unlikely that we can go to new highs without that being a precondition.
Now, remember, guys, the worst case scenario for the NASDAQ is this red line. If we break below this red line, I think America is like done as a world superpower, right? Like if we break this red line, that means like, I don't know, maybe electricity has collapsed or the internet has fundamentally broken. Well, like something like I want to say generationally, but more like 10 generations event has occurred. I think NASDAQ going below this high at this point of 5,000 is literally like once in a 500-year event, which probably means the end of the US as a global superpower and US dollar as a global reserve currency. I don't see us going below that. And that's because on this run up, this was legitimate tech sector innovating. This wasn't hype like it was in the 90s. And that's what we need for Bitcoin. We need legitimate use of Bitcoin and blockchain, not hype on the latest ICO.
On that, you got a good question that actually ties into that. So do you think, Tyler, I'll throw it to you and then Tone, do you think that rehypothecation or fractional reserves from things like the BACT will affect Bitcoin in the future?
I'm not sure. I know what hypothecation and rehypothecation means, but not relative to BACT and Bitcoin. Those are microbes crawling on the sprinkles on top of the sundae. It's a very, very minor thing. Bitcoin has got an essence to it that is very powerful, but needs to be understood. Everything else, such as what exchanges they're traded on, what kind of hedge funds use, what kind of techniques to buy and sell them, all of that sort of stuff is basically, to me, meaningless. What is meaningful is all of the things we talked about at Unconfiscatable. That's the essence of Bitcoin, and everything else is a weak sister or weak brother to that. And then where those other things are traded and who is trading them and what techniques they're using and if they're leveraged or partially broken up into pieces that is called hypothecation or rehypothecation or fractionalization. All of that is not important, will not change the direction. What will change the direction in a bear market is the fundamentals that are causing the bear market have got to go away. None of them have to do with Bitcoin. Therefore, something else is driving this bear market. The same thing is true in the bull market. In the bull market to come, all of this other stuff, people can talk about it, but it doesn't change the essence of what Bitcoin is and what it can do. So that's a long answer, which is no. BACT will have absolutely nothing to do with the trajectory of what happens with Bitcoin.
DJ Vase.
Yeah, so let me comment on the rehypothecation stuff. So the concept of rehypothecation, I can't even pronounce it. Whatever, I'm tired. So this all became some kind of it's like a light bulb went off, and like everybody is like, oh my God. It was this interview that Trace Mayer did with Caitlin Long. And Caitlin Long comes out of Morgan Stanley. And this is why any questions about rehypothecation to me and Tyler are very strange to us, because all rehypothecation is just another way of saying current monetary theory of the financial sector. This is just how everything is done. Like, this isn't new. This has been around for 40 years, 50 years, longer than that, right? I mean, Tyler's whole career in finance has been investing in a world where there is fractional reserve lending. Calling it rehypothecation is just a subsector of fractional reserve lending. This isn't it's just second nature to us, right? Which is why any question that you ask me about rehypothecation, I'm like, so? It is the way it is. It's the way life works, right? Everything is collateralized. Everything is, you don't need full backing of anything. So I don't know how it's going to apply to backed, just like what Tyler answered, because we don't know if and when backed is ever going to launch, right? So first, backed has to launch, and then we have to look at their terms and conditions, and we have to look at what they're planning to do with the Bitcoin collateral. Okay, are they going to lease it out like they do with gold? I don't know, right? They're part of the traditional financial sector. So if the regulation allows them to fractionally reserve their holdings, they're going to fractionally reserve their holdings. Like, I am way more comfortable with my life savings in a brokerage account than at the bank, because banks have bail-ins and brokerage accounts don't. Brokerage accounts, when I have my money at a brokerage account and it's in cash, it's supposed to be in cash. That's fully collateralized unless I want to loan out shares that I bought for somebody else to short, and I'm compensated for that. So, like, specific questions about rehypothecation is just the way life is in the world of finance for the last 100 years. This isn't like a revolutionary thing. Tyler, am I wrong on any of this?
No, not at all. And we could go, and maybe Lee and I will do a whole vlog on that, because it's really very simple. And people in the crypto world, in the Bitcoin world, in general, without overstating it, in general, don't understand that, but they're afraid of it. They think it has something to do with evil banks, evil central banks, evil Chase, and what they do with the gold market and all of that. And all of that is true, but you have to drop the word evil. It's simply the way business has always been done on exchanges that are tied in some way to something like a stock certificate. It used to be you would actually get a stock certificate sent to you by the transfer agent from General Motors, and you would receive it in the mail, and you would put it in your safety deposit box. But that's so inefficient that then what started happening is everybody left all of those pieces of paper with brokerage firms in a place called the cage. And in the cage that was locked up, they had all these pieces of paper. And you move the paper from one side to the other side of the cage when somebody wants to lend out their piece of paper so somebody could short it at another brokerage firm. And then a note is put in on the other side that was done. Now it's all electronic, but it's the same basic principle. At a bank, in your savings account and checking account, there is no money there. There hasn't been money there for a century. There's 3 cents for every dollar you think you've got in your checking or savings account.
Hey, Tyler,
the way the system works.
Let me hold you up for 1 second. As far as I understand, in your brokerage account, that's not the case.
What is not? No, not at all. In your brokerage account, if you've got $100,000, you've got $100,000. I'm talking on the banking side.
Right. But the other question is, do some of the brokerage accounts hold your money at the bank? And I'm actually not sure, but I don't think they would because of that.
No, they don't, but they do it through money market funds. But money market funds, the money's got to be there. It's actually a fund, and it is controlled by all of the regulators, just the way a mutual fund or an ETF is. There's all kinds of rules. So all the money has got to be there. So I tell clients that say, okay, Tyler, you're talking about doomsday coming with this huge debt crisis, and you say there's 5 solutions. What should I do with my money in a bank or a brokerage firm? And I say, I would rather have it in a fidelity firm that's privately owned with $7 trillion of assets under management and a thing that they call supplementary insurance above $250,000 per account under SIPC that goes all the way up to 100 million. I had very big union institutional accounts with $100 million in them, all of which was at Fidelity and all of which was covered by supplementary insurance. So what I'm saying is just what Tone is saying, that the banking system and pension systems and things tied to the government directly, the Pension Guarantee Benefit Association and all of those kind of things have pennies on the dollar backing up the real money. That's true fractional reserves. And our off-balance sheet items, such as Medicare and such as Social Security, there's no money at all in them. It's not 3 cents on the dollar. There's nothing there. It's only people paying in now that end up paying me my check, because I'm almost 70 years old now, so I've been getting a check for 5 years. But it's not coming from a pool of money. It's coming from an empty room where money comes in one side by younger people that are paying into Social Security and goes out the other side. And when that is done, the balance is zero. So this is a much bigger topic. I'm not sure how we got, oh yeah, because of hypothecation. The point is that that's the way it all works. So if you just don't want to play that game at all, then you've got to stay away from regulated government exchanges or things like the CBOE or the CME or backed. But then you are left with unregulated craziness that you wake up the next day and the money's not there because nobody's looking at it except for a small group of 3 people, and nobody knows if they're black hats or white hats or gray hats. So which do you want? I will go for the regulated money system until that money system is properly put into the right categories through either Bitcoin or back to some kind of a standard like a gold standard or a basket of currencies, and we get rid of the debt side of the problem, and then we'll go through another generation or 2 or 3 or 4 generations under fractional reserves.
Last comment, and let's go have George in mind.
Okay.
Correct.
Well,
yes.
Go ahead, Leah.
Well, just to your point, Ty, yeah, under the Fed Reserve, it's Reg T and SEC rule. This is like 15C3, and that allows the rehypothecation submitted to the clients. I think it's 140%. And here's a mouthful for you, Tone, which is just, it's really simple. It's a creditor of your creditor, but a rehypothecation is a hypothecation of an already hypothecated asset. There you go, mouthful. Go ahead.
Yeah, you could just say hypo and rehypo.
Yeah, but that's not as fun.
All right, one last comment is that while it's generally safer to keep your money in a brokerage account than a bank, shit does happen. MF Global and Corzine do stupid stuff and blow up a fund, and he would be rotting in jail for the rest of his life, like Bernie Madoff, if he wasn't best friends with Obama. Crazy things do happen.
Well, at the same time, I was trading commodities with MF Global when that all came down and I got every penny back that had been in my account and had been on any of the exchanges that were being traded by MF Global. So I believe that everybody got paid back.
Really? Who was the backer of that? Because, like, again, I think that was Obama doing to keep his friend out of prison, because like that was bad. What happened?
It was horrible, and I forget what the numbers were, but it was but they covered it. MF Global covered it out of their own capital, the losses, because of the money that basically disappeared overnight. And that's one of the reasons that he was able to get off, is because they made good on it. He had just stepped into that position in just right before that all came apart. And so anyway, but the point is, everything fails at some point. You must weigh in your minds which is more likely to fail. And if you come down on the side of the crypto infrastructure today is more likely to fail than the banks, the brokerage firms, then that's your opinion. I completely disagree with it.
All right, Tone, what you got up?
Hey guys, all right. We've kept you long enough. We're gonna close out. Just a reminder, these are my in-person workshops: Bangkok, New Delhi, Vienna, and Hong Kong. Egypt is going to be up here very, very soon, and maybe a couple of other spots. Tyler and Leah, they're doing their hyperwave webinar that they'll tell you about in a second. If you're only interested in the sequential indicator, you can check out the indicator page. If you want to just support my work, please check out the affiliates page. If you're going to be using TradingView, please use the link to sign up. Same thing if you're going to use a VPN, or if you're going to join us on the cruise. Actually, I'm not sure if anyone else is going. I keep trying to convince Leah to come back, but I will be on the cruise, maybe debating Roger Ver again. And even if you're going to do some Amazon shopping, please click on one of those links first. I've actually upgraded some of my tech. I should probably update those links as well. If you just want to learn trading, please check out the educational section. And there is a new conference coming soon, but and all the pictures from our lovely photographer, Daisy, will be posted up here very, very shortly. And we're going to have a whole gallery page. She took some amazing shots, and they will be here. Let me pull up Lucid Investments. Where are you guys? They're somewhere on this page.
Thanks, Tone. Yeah, the pictures are so good. This is amazing.
All right. And Tyler and Leah, your website is loading. There.
Great. Yep. We've got our webinar on 2 days, 4 hours each day, 12 to 4 o'clock this Saturday and Sunday coming up. You just go to lucidinvestmentstrategies.com, as Tone is doing. You just go to products, and then you go to webinar, and you just click on the magic button, and it empties your bank account. It's really a wonderful innovation. But seriously, we had a fabulous time with the first public workshop ever for hyperwave at the Unconfiscatable conference. And we really would have loved to have had 20 people. And then all of a sudden it was 30 people, and then it was 40. And then we went beyond the size of the room, and we ended up with 55, but don't tell anybody at the hotel. And we got great responses, and we are very, very grateful for that. So we came back and we said, we need to do this more efficiently for more people. And we've set up this 2-day seminar. It's exactly the same cost as it was in Las Vegas. There's actually going to be more And because there's going to be more on the second day than we were able to do, because I just couldn't walk anymore after standing for 8 hours pacing back and forth. But on the second day of this webinar, this Sunday, Saturday and Sunday, we're going to go into 25 current hyperwaves that are very tradable in all kinds of different phases. Some are in 2 going to 3, some are 3 going to 4, some are 4 going to 5, 5 into 6, 6 into 7. And we'll show you how and why we drew them that way and the best way of trading hyperwaves. For the previous day and a half, you're going to learn all of the rules and how to do it. But then the last part of the day, we'll spend at least 2 hours just going chart by chart, actually doing it all together. So we're very excited about it. We think the price is, I know that it's expensive for a lot of people, but it's very, very cheap in my humble opinion, relative to what you will be able to use for the rest of your life, not just with Bitcoin, not with cryptos, but with every asset class when these rare things come along. And for some bizarre reason, we've got tons of them right now at this point in time in history. I've never seen anything like it before. I don't have an explanation for it other than what we've talked about before in terms of this looming crisis in the world financial community. So if you can join us, we'd love to have you.
Thanks, Tone. All right. Thanks, partner. And let's let you off. Hey, by the way, okay, I actually know Georgian. Here's the words you need to know. Gamajoba, rogohar, ludi, of course, beer. Your favorite, vino, wine. I think it's called Jumelia, delicious. And then mikvihad, if you meet a beautiful woman tonight. Okay, I'm done.
I actually have to go to Georgia. This is just a restaurant. But I'll probably be in Georgia at some point this year, so I can't wait.
Terrific.
Nice. All right. Actually, I can't hear you guys.
Thanks, Tom. Thanks, Leah.
Bye, guys.
Thanks, everybody.
Bye, guys.